Hi, this is Kevin with your daily Forex report for February 7th, 2011. To start off by looking at the US Japanese yen pair. This pair has closed up in the previous session and has sort of started moving sideways a little bit. We do have an area of what's called a double top here, so look for that to be some sort of a area of resistance, and it has started to level off a little bit. 4 up candles in a row with quite a bit of volatility. We'll look for this to start to head sideways and maybe even start to move down a little bit within the coming sessions. Look for this pair to go as high as 83.01 and as low as 81.61, with some support around 81.76 and some resistance around 82.82. Alright, moving on to the Euro USD pair. This pair did close down in the previous sessions, but there was a whole lot of volatility moving back and forth between it, which tells me that the pair had a little bit of indecision as to where it was going to go, and the fact that we're up in the current session already leads me to believe that a reversal may be in progress. Look for this pair to go as high as 1.3712 and as low as 1.3452, with some support around 1.3673 and support around 1.3500 and some resistance around 1.3673. Alright, moving over to the pound dollar pair. You'll notice we've had a nice little upwards trend with a little bit of pausing in between each spurt. So considering the previous session closed down or closed up with the previous 2 sessions closing down, this pair is starting to move a little bit sideways like we did previously here, but we are looking for it to continue to move a little bit sideways. Look for some popping near the end of the week. Could possibly be up, continuing this trend. Today, look for the pair to go as high as 1.6245 and as low as 1.5961, with some support around 1.6060 and some resistance around 1.6202. Alright, moving on to the US Swiss pair. We've had, over the past couple days, not excluding yesterday, over the past couple days, last week we actually had quite a bit of a rally upwards. Starting off this week, it ended up turning around just a little bit, and now we're actually sitting in a red candle, a down candle for today thus far. Looking for this pair to actually do somewhat of a reversal over the next couple of days, but be very wary, as it could use this as a period of pausing around a 50% retracement level, and it could continue up. So today, look for this pair to go as high as 0.9652 and as low as 0.9452, with some support around 0.9472 and resistance around 0.9609. As far as news announcements go today, we actually don't have anything that would potentially move the market quite frantically. So we're actually quieting just a little bit for the initial claims releases that happen a little bit later on in the week. So not a whole lot of volatility, more than likely, but there have been some surprises before, that's for sure. So just keep an eye on all the pairs over today's session. Look for it to be somewhat of a quiet day, but again, pairs tend to move even on days with no news. So just keep your eyes out. Something I want to show before we go here is that the current chart, the Swiss chart, we've been on a downward decline for this for quite some time now, and if you'll notice, this pair seems to have somewhat of a bottoming trend. It's what I call history repeating itself. You'll notice that this area here was a nice line of resistance, and it has a pretty matching or line of support rather, has somewhat of a matching line of resistance, but the fact that they are both squeezing down toward each other, the top one being flatter than the bottom one, denoted that it was going to fall quite a bit, which it did. It busted through this bottom line and would have been an excellent sell opportunity. Since we rallied up last time, and this is on a daily chart by the way, since we rallied up last time and have continued to fall, history has indeed repeated itself, as the bottom line here is now starting to form, and you'll notice in comparison with this bottom line, it's quite a bit flatter. Actually, it's doing what we like to say, it's leveling out just a little bit. So this top line here has yet to be created. using this point. So if indeed it were to be the same sort of flatness in proportion to this previous triangle formation, then it would be pretty horizontal actually. So this pair can do one of two things. First of all, if it were to break this really nice heavy line of downwards resistance, if we were to break above that, I would look forward to continue up to this horizontal line here. But if it were to continue down, definitely continuing down to this bottom line down here, possibly creating the triple bottom that we saw before. So very interesting time for this particular pair here, as you know, a spike in either direction could lead to a window of opportunity to grab a few pips out, you know, maybe even 100 or 200, because the gap between these two prices is around 180 pips. And if we were to continue down past this, you know, nice level of resistance here to the bottom, it's about 180 pips as well. So you're looking at about 180 pips in either direction. So look for it to spurt about 90, maybe pull back a little bit, and then continue onto the lines that we've drawn here. Well, that about does it for today. So until next time, this is Kevin. Good trading.